Right. Start. About analysis completed most of the ratios. Last week, we covered all the ratios, right? We discussed this qualitative aspects as well. Very important. So then I have already uploaded this group assignment to the LMS. Assignment due date 15 January 2025. So then the assignment depends on the ratio analysis. Ratio analysis is the same financial statement analysis. So then it may be ratio analysis, open science financial statement analysis, trend analysis. By using techniques, we need to analyze the industry. That's the main requirement of the global diagram. It is not a analysis of individual companies. You can analyze the group, whatever industry, by using basic ratios. So then you need to have kind of a industry trends, industry type of a conclusion required. If you analyze it, let's say maybe hotels. In the industry, we are having limited this listed companies in hotel sector. But they are discussing hotel sector. The industry may be very large industry. We have a formal sector, informal sector. You need to define that. So then you have to do kind of an industry analysis by using available data. Then you can have groups, and I explained that you commitment to complete the assignment. The last minute excuses may not be valid, right? You can come up with different thousands of excuses. I'm not expecting that. Line 30, right? Advance, you can plan and deliver that. That's the expectation. Right. So then here, what I want to tell you is, if you are doing ratio analysis, the qualitative impact, qualitative information are really important to analyze. Not only the numbers. We have different numbers, different results, but that should be cross-checked with this qualitative aspect. That was the last discussion we had last week. Because once you come up with a case study, if you want to give good explanation, whatever the numbers you are getting, must take it the practical qualitative aspect in the industry or the company. Let's say they are doing kind of a new marketing campaign. They are interested in marketing campaign that increases the productivity for the sales, and then that will impact to your gross margin as well as to the profitability. Likewise, you need to link that, and then let's say customer satisfaction. With some of the latest news or latest trends, customer satisfaction may decrease. But as a customer satisfaction decrease, that will directly impact to the sales. All those things need to be captured to the evaluation. Whatever the summary you are giving, whatever the evaluation you are giving, whatever the rationale you are giving, conclusion should be depend on the qualitative aspect as well. That's how you need to draft the analytics report about the company. So then I will share some of the drafted reports with you all, so that you can follow those things, and then you can practice this for me, this may be the difficult part of the exam. By consolidation, if you are expert about consolidation, it's very easy to do that. And the console ගණන් more than 40 විතර questions කරලා වාට ගොඩක් මිස් කරන්න පුළුවන් console. First, standard figure here got the as it is a standard first question. Then others are very maths related things, direct answers. But here, I don't have kind of a marking scheme. So then you have to calculate ratios. Based on ratios, with qualitative aspect, you need to compare with the qualitative aspect. You need to give kind of a report about the company. So then writing a report about the company in an exam, maybe exam report එකක් දුන්න සමානකේ හිතලා report එකක් කියනවා කියන්නේ. ඒක started for සීමාවල case study කියන්නේ. Case study again. So whatever the situation, whatever the problem highlighting in the question, you have to analyze and you have to give a report. Report in the sense that means you are the CFO or CEO. You are going to report to the audit committee or whatever the forum or regulator about that issue. It should be analyzed. There should be introduction, analysis, and the conclusion. That's it. Right. So, any doubts, questions about this ratio analysis? Ganan had the last week. Oh, maybe. Our question එකක් කරනවා. So the question number 3. Can you do this? I do quickly this question of the brief. So then I have already uploaded this to the LMS. Right. Then you may still like this, right? That would be kind of a well, not how to manage the numbers. Then you may receive the ratio. And you know that the basic thing, we are having three elements in a ratio. If you are getting two, the other one can be calculated. So that's a simple logic. Right? Right. So then I have given set of questions. You can try here. Yes, I will share these answers with you all. So I'm not going to do other questions. Last week we discussed this question number 2. Right? All done. So these are the additional information and be given in the exam, right? This type of explanation may be given in the exam, not only the ratios. Star PLC produce electrical equipment for the retail market. Retail market and the wholesale market. You should know the difference. Retail market, wholesale market. Prices may be high in the retail market. The marketing campaign should be done to the retail market. Wholesale market, kind of a mass marketing campaign should be done. Otherwise, the different channel. It is a wholesale market, right? No dividend payment is made during the years considered, right? No dividend payment. Okay. the marketing team of Star has done a promotional campaign during the year ended 31st March 2023. Marketing campaign of that what you have to focus in. So then the check whether the sales increased 110,000 to 148,000. So then you can clearly comment. You have to link that marketing campaign to sales. So that's why it's given. So once you're analyzing sales, once you're analyzing the gross margin, you can clearly see that gross margin has increased because that may be the one of the reason having kind of a marketing campaign, right? Sometimes marketing campaign may not be impact to gross margin, right? If we increase sales, gross margin may be same because the selling price and variable selling cost. So then the margin will be same. Sales can be increased. If you have a kind of economic scale, once you are having more sales, you can save something. You can reduce your variable cost, purchasing cost, cost of sales. Then only you can increase the fund. Once you are moving out to the large scale, if you can save something, it's called economic scale. Through economic scale, you can reduce your cost of sale. If you are going to reduce your cost of sale, then only margin will be impacted. Right? You have to be very careful. All sales are made on credit basis. So then you don't have cash sales. Assume 365 days a year. You cannot done now, ne? සමහර කට්ටිය 250 per year කියලා හැදුවොත් කියලා තමයි ඒක තියෙන්නේ. So then for this content I can give more qualitative information. Once you are doing your analysis, once you are doing your conclusions, please relate your numbers with these results. අදිසියවත් මෙතන marketing campaign එක කරලා තියෙනවා. Right? We have done with the marketing campaign. If that sales has not been increased, so then how are we going to comment? So then though they have done a marketing campaign, still the sales number remains same. So there's no positive impact to the company through the marketing campaign. That's the comment I expect from you all to include to your summary conclusion. This type of analysis should be there in your marketing scheme. So then I can't guarantee that this is the content. So you have to be creative to give that summary conclusion about the company. So then that's basically once you are looking at a balance sheet and a P&L, how you can reflect the company. So then that's the skill you should have. In order in order skill there. After being counting beholder, you should have sense about these numbers. Margin, bottom line, top line, and then operating profit. All those things, quickly you should have kind of a picture about the company and the industry through the numbers. Yeah. So then after being a degree holder, you don't want to get broker support to purchase shares, right? So then once you see in your 10-year summary in the annual report, you can analyze that company. You can evaluate that company. You can do independent valuation about the company. Then you can do the share purchase. Simple. So then you can earn gains through share market by using this type of analytics, trend analytics. Right? So then this is really useful for you. Okay, so then we are moving to the next area under financial statement analysis. That's about other techniques what we can use for financial statement analytics. First one done, common size financial statement analysis and the trend analysis, and then horizontal and vertical analysis of financial statement. So this is the two other techniques you can use for your analytics. Right? Common size financial statement analytics. So once you are comparing two companies or two financial years, two companies, two financial years, to comparable purpose, what you can do is we can convert these financial statements, financial numbers to a common common statements. Common statements. What do you mean common statements? So then you are having a balance sheet, A company, having a balance sheet, B company. You want to compare. What you can do is you can compare the gross margin to gross margin, sales to sales. Likewise, you can do kind of a comparison. But in the numbers and the complexity of the two balance sheets, it is difficult to compare. Right? So then what we can do is we can convert that to percentage. What do you think? Let's say from the balance sheet, what you can do is total asset to total asset, you can calculate the percentage of PPN, percentage of inventory. And then from the total asset, liability how much? Other liability how much? Likewise, you can convert to a percentage. So then you can easily compare, right? A company to B company. A company to B company. That's the order. So then here we may have 1 billion. 1 billion. What a may. Places of Pratland, decimal, the may on the name. 2.5 billion. So then comparison may be very complex. So then for this complexity, we have a solution that is called common size financial statement. Before you are analyzing what you are going to do, both financial statement should convert to a common size financial statement. We convert to a common, what do you call that? Common base figure. Common base figure. That may be the highest value in that statement. In P&L, what's the highest value? Total assets. Total asset not in the P&L. Revenue. Revenue is the highest value. So then if revenue 100, how much cost of sale? How much gross margin? How much other income? How much the net profit? So then we can do the same exercise to the B company. So then you can compare them. දෙකම තියෙන කීයද? CA. CA හරි දාගෙන. So then here may be 1000, here may be 1000. To say 1000, how much gross margin they compare? Say 1000, how much gross margin they compare? You can easily compare. So then again, you are having issue, right? You can't compare the top line. All are same. So then here we have the benefit as well as some negativities also there, right? Challenges also there. But it's a kind of a tool we can use for financial statement analysis. That is called common size financial statements. I hope it's clear. It's not a rocket science. You can easily understand what it is. It's a balance sheet, common size financial statement. What they have done, as I said, what's the largest number in the balance sheet? Total assets. If total asset 100, how much is the cash? How much is the account receivable? You can easily compare the last year to this year. The bigger number comes, if you are having a long number, you can convert to 10.31, 10.11, 9.34. You can easily compare the last 3 years. You can see there's a positive trend. Yes. Year 1 to year 3. Yes. Any positive trend. Total fixed asset. There's no significant movement. Long-term debt, you can see, if you consider that as the final year, long-term debt getting increased, right? 18, 19 to 20. Likewise, you can easily convert and analyze. You all can use these techniques for your assignment. So then if you are selecting 5 companies, you can easily compare 5 companies by using this technique, right? This is a P&L analysis. P&L එක analyze කරන්නේ මේ විදිහට. හැබැයි exam එකේ කොහෙලාවත් දෙන්නේ නැහැ normal balance sheet එකක් දීලා common size financial statement හදන්න දෙන්න කියලා. That won't be there in the exam, right? You can do this easily. Here 2 years, 2 years. What they have done is we convert revenue to 100. If revenue 100, how much is the cost of sales and the gross margin? You can easily compare. So then you may have common size balance sheet, common size income statement, common size cash flow statement, common size cash flow statement. For that, what the base figure you are going to use? It depends on whether you are going to do direct method or indirect method. Cash flow you can prepare by using 2 methods, direct method or indirect method. Direct method or indirect method. For indirect method, what you can get is profit after tax. Profit after tax can be used as a base figure, right? If profit after tax 100, can convert other numbers based on that. So these are the limitations. These are the limitations. So the same issue was there. If they are using different accounting policies, there's no reflection in the common size financial statement. The same issue was there. Whatever the adjustments policies, right? Difficulty when comparing accounting period, as the companies may be using dissimilar accounting calendars. What do you mean by that? Difficulty when comparing accounting periods, as companies may be using dissimilar accounting calendars. So some of them are using 31st December is the year. Some are using 31st March. 2 different calendars. 2 different calendars, right? 2 different calendars. And sometimes they have done for 12 months. This company may done for 6 months. 6 months you convert to 100. 12 months you convert to 100. The same 100 you are comparing. Right? But the period is two different periods. So then you can't directly compare this type of things. You are comparing 12 months to 6 months. If you convert to a common size, may not be getting a real picture. Right? Composition wise you can analyze. Composition. If not, what you have to do is you need to convert it to the annualized number, convert it to the common size financial statement, then you can analyze this. Right? Then you need to understand what's the area you are going to analyze. That's really important. And then inconsistencies in the preparation of financial statement make the common size aspect irrelevant when evaluating the performance of the upper column. Obvious, right? Common size financial statement do not provide complete information is very as a fluctuation. Yes. Common size financial statement changes. So then the very limited information they are providing through common size financial statement. We don't have detailed information to analyze, to understand the fluctuations within the company. Then those are the limitations. Other limitation is we can't compare the base figure. So then we consider as the revenue 100, revenue 1000. The same number is appearing in other company. That's another limitation, right? So then this question can be tested in the exam as a like two marks question. What are the limitations of common size financial statement analysis? These are the advantages. As I discussed, it's very easy to understand numbers. So then that's the main positivity. At a glance, you can compare. Quickly, you can analyze numbers. That's the key benefit, right? Right. So then you can use this technique to your industry analysis. Once you're analyzing something, what you can do is you can use this technique. Whatever the analysis you are doing for your audit committee or board of management, this common size analytics technique can be used. Another technique. Now we have discussed ratio analysis, common size analysis, and two techniques. Now I'm going to discuss trend analysis. Trend analysis is also a kind of a very straightforward analysis. I think you have already done some of these things, right? Trend analysis. Then if you are comparing last 10 years, last 5 years performance, you can see a trend. Let's say you are comparing the revenue, comparing the gross margin and cost of sales. If it is like a hotel company, the occupancy, you can see a trend. It may be kind of a positive trend, negative trend. Sometimes it may be fluctuations may be there. So the unusual fluctuations may be there. එතකොට බලාගන්න පුළුවන් ට්‍රෙන්ඩ් එකේ මොකක්ද කියලා. ඒ ඔයාගේ ECG එක ට්‍රෙන්ඩ් එකට තමයි යන්නේ. ECG එක වර්ධිනව නම් නේ. ට්‍රෙන්ඩ් එක වර්ධිනව නම් බලාගන්න පුළුවන් මම මොකද යන්නේ කියලා. So then whatever that's also trend analysis, right? You know that this Excel giving trend analysis. You have kind of a pattern. You can predict by using Excel. That option is there. Everybody else. Trend analysis clear now, right? Can you see this? So then you can analyze the first year results, second year result, third year result. By using these results, this is the actual picture, right? By using trend line, you can analyze the final results. So then likewise, trend analysis like that. So then that option is there in Excel. You can develop a kind of formula, right? So then, so this is a chart. We are using X and Y. X and Y. This type of a formula is there in this chart. Phi equal mx plus c. So then this formula can be dragged furthermore. So then we can get a trend line. To the trend line, we can put a formula. So then you can put the equation. You can put the equation. To this equation, once you are putting numbers, you can get whatever the forecasted figure. Right? That is called basic trend analysis that was given in the Excel. Likewise, you can use different tools and different some of the operating systems they are giving trend analysis reports. So the trend analysis is a kind of a past history can be repeat again. That is called kind of a trend analysis. By using the past history, we analyze the trend and we expect the future results. So then to change that trend, there should be a kind of a solution. So then if there's a decline in trend, so then we need to get an action over there. So then you can expect the positive trend in future. That's the basic understanding about trend analysis. So then that can be used in different analytics, different industries. That depends on the basis. That depends on the usage of that depends on the requirement. So then what you want to do, what you want to analyze. Then based on that, you can use the technique, whether it's ratio analysis or trend analysis or common size financial statement analysis. Right. Take a negative. දැම්මම හොඳ නෑනේ නේ. එහෙම වෙන්නත් පුළුවන්. So then you can't draw a trend like this. Right? Excel එකත් බලන්න එහෙම වුණා. First year, second year and third year. So then if you have kind of a different results, you can't understand a trend. You can't predict that, right? So then you can't have kind of algorithm through this. So then pattern should be identified. Then through that pattern, we can develop a trend. Other way around. Right. This is a trend analysis drafted here. Revenue, electricity, salary. So then these are the kind of variables you can use for this trend analysis. So then once you are doing kind of trend analysis with some other variables, there should be a trend. Otherwise, can't be analyzed. You can't analyze the revenue versus trend expense. There's no trend, right? So then if you want to analyze a trend, that variable should change parallelly. Otherwise, no point to analyze. So then before you are doing the analysis, there should be a basis, presumption that, what's the presumption that before you are analyzing this revenue, electricity and salary will go in line. Because those are variable, these are variable to cost related to the revenue. That's the assumption. With that assumption, we are starting the analysis. Through that analysis results, you are getting some fluctuating and different results. Then only you can understand the differences. For these differences, this type of differences, you need to have reason. Why? Let's say electricity drops, revenue and sales increase. This type of scenarios, there should be a exact reason, right? Here, without a reason, electricity increase. There should be a reason. So then that's how we are supposed to do this trend analysis, right? So then basic trend analysis, salary to EPF, ETF. You can do kind of a basic analysis. So then EPF, ETF is a kind of a percentage to the salary, right? salary increase, CPF, ETF may increase. That can't be, different numbers. That percentage always same. The gap always same. That analysis is a kind of basic analysis you can do. Okay? So then once you are doing your trend analysis, firstly you need to develop your expectation. Expectation is really important. Expectation, no assumptions. Expectation should be defined. Then you have to do the analysis. And then check the results with the expectation. Identify the gap between your results and the expectation and give the reasons. That's how you are going to do a trend analysis. Basic step of a trend analysis. You have to do this in your design and plan. Trend analysis. Right. ඒක ට්‍රෙන්ඩ් ඇනලිසිස් එක කරන්න පුළුවන් ඒරියාස් එක දැන් ඔයාට මේ අතත් වැහැලා හෙටත් වැහැලා අනිද්දත් වහිනවා කියලා කියන්න මේ වගේ ඒරියා කියන්න බෑනේ. So then there's no such a trend, right? So then that depends on some other factor that may not impact to kind of a trend. So but මේ සතියෙම වෙනදා ඊළඟ සතියේ වගේ trend එක ගන්න බෑ. So that depends on some other different factors. So once you are developing kind of a trend or kind of a expectation, that should be realistic, right? And horizontal and vertical analysis. Horizontal and vertical analytics. This is again once you are doing your other analytics, this analysis, horizontal and vertical analytics are there, right? Horizontal and vertical analytics. So what you are doing, once you are comparing, once you are using other techniques like common size financial statement, ratio analysis, you have these two types. Not the calculation. Once you are comparing, once you are analyzing, you can do horizontal analysis and the vertical analysis. What do you mean by that? You are calculating this current ratio. Current ratio. No? So the total asset divided by total liability. Current asset divided by. So then once you are calculating that, so the ratio itself, it is the vertical analysis. Ratio itself is a vertical analysis. What do you mean by that? You are getting numbers from same balance sheet. Same balance sheet. In the sense, you are analyzing this way, right? Horizontal analysis. If you are comparing current ratio 2023 versus 2022, the horizontal analytics, right? If you are comparing current ratio versus solvency ratio, is a vertical analysis. So then you need to evaluate the direction. If you are comparing same numbers in the same year, in the same company, it is called vertical analytics. If you are comparing that with the other company or other year, it's a horizontal analysis. Whatever the ratio you are calculating, you can do vertical analysis as well as the horizontal analysis. Whatever the results you can compare within the year, horizontal analysis, no, vertical analysis, you can compare with the other companies and other years. That's called horizontal analysis. Right? Are you getting what I'm telling here? So then, in common size financial statements, we have both analytics. Common size financial statements, we are having both analytics. We are analyzing within the year as well as we are comparing with another year. Right? So this is kind of a analytics type. Once you are analyzing, you can use both vertical versus horizontal. Otherwise, you can't get a result. Right? This is a horizontal analysis. Horizontal analysis means to 2015 to 2014, 14 to 13, various analysis is a horizontal analysis. Horizontal analysis. This is a vertical analytics. Line item 2, line item 3. So then, once you are calculating common size financial statements for that financial year, it's a vertical analytics. 100, 56, 22. It's a vertical analytics, right? Right. Those are the techniques we can use. And other than that, you can come up with different techniques to analyze. Maybe correlation, maybe standard deviation calculation. So in the grade 2, you analyze by using this mean and median, right? So then we have different techniques. Okay. So then, other than we have probability analytics, probability-based analytics will be there. We can calculate probability, standard deviation, beta factors, risk factors, and analyze. Right? So then another thing is once you are getting these numbers, you can compare with the risk factors, and then you can come up with the real solution. And the request is once you are having numbers, compare with the qualitative aspects with the risk factors. Then you are getting a final conclusion to make proper decisions. Right? So without having this risk analysis or qualitative analytics, you're just getting numbers that can be done through a software. What your role is to have an expert knowledge to analyze, get final result by using qualitative, by analyzing qualitative aspects. So that's your role. That's why you are here to analyze, and you need to put your standard related knowledge to this, right? So then IFRS 17 coming into the picture, that will impact to your gross profit, is the GWP, contractual service margin. So then you need to explain that. Once you are using deferred tax, once you are moving to full IFRS to let's say SME to full IFRS, what is the impact to the financial statement. Once you are presenting that impact, you need to do vertical and horizontal analytics. Vertical and horizontal analytics, and you need to present it. So then the standard impact should be summarized to analytics, and you need to communicate that. So then you should have that ability. So no, and then profit are doing the goal. Then you should have a proper number and make it very easy to understand. Otherwise, they don't know about the standard terminology and the requirement and the basics and the logic behind that. And if we are calculating numbers with this standard logic, they may not understand anything, right? So then what you want to do is you need to simplify it and communicate it properly. That's your role, right? So then that's the expectation you should focus on and work on and develop your own, type of conclusions. Don't depend on, the basic general conclusion. Current ratio should be 2 and quick ratio should be 1. That depends on the comparison. So then you may have different arguments, right? So likewise, you have to be very creative once you are analyzing the company. That should be customized to particular company, and your answers can't be copied from someone. So then there should be a very different perspective. We may not have black and white answer. That may have gray color answer. So then you can give different views, right? That's a requirement. So that's it about other techniques. I will share some of the other, different techniques with you all for your understanding. And you know that with the technological aspect, this analytics, data analytics are very important feature to make decisions. Through data, through big data, only we can make decisions, right? Data is the key. Data is a resource that can be insured, that can be saved, and in future, the money and data are two different resources, but sometimes data may be more worth than money, right? Data. So then data analytics is a key source, key learning, key area you can focus in your future. Whatever the sector you are in, maybe IT, maybe medicine, engineering, commerce, whatever the area you are in, data analytics is a core component to make decisions. Let's say if it is a food city or hotel or some other manufacturing company, your orders, your budgets definitely should be depend on the data, right? So as I explained, once you are having this inventory levels in this supermarket, they should have kind of a proper data analytics about their customer base. About they are having these loyalty numbers. So through that loyalty numbers, they are studying sales. But they are studying your pattern, what you are buying for the annually. You have purchased this type of things. It may be type of spicy things, or maybe some other dairy products. You are a fan of milky products, right? Spicy things. So then all those things can be identified through data. So then accordingly they plan their order. For this village, we have this much of people for dairy products. So then we have more than 150. They may order for this year this much. Accordingly, they are planning their orders. Right? So that those things, they understand the trend. Facebook එකේ හරි මොකක් හරි whatever the YouTube go, whatever the social media you are using, වා search කරන්නේ weddings කියනට. වා search කරන්නේ මොනවා හරි topic එකක් ගැන. So then it may appear some other suggestions, right? So then it build what is there. In build, once you are going through, once you are searching something Google, it may appear they will do kind of a trend analysis. What are the requirements to you? So then they will pop up that. You know that in Facebook, we call that boosting, right? If you want to boost the advertisement or kind of a post, we can target the kind of a group. අපි කියන්නේ කාටද? වෙඩින් මොනවා හරි type එකක්. මොනවා හරි හොඳ spicy food එකක් වා invent කරලා. නැත්නම් start කරන tip එකක්. Tip එකක් start කරලා for the advertisement you want to boost that. Are you going to boost to the more than 50 years group? No. So they are going to boost that to a target group. Maybe 25, maybe 25 maximum, 18 to 25. 18. So then you need to customize, right? So then all the things depend on the data. Data, not only data, trend of the data. That's really important. Based on that trend, you can take your decision. You can customize, you can focus your market. So then all those things depend on the data, accurate information. Otherwise, we are posting, we are making advertisement. We are putting advertisement in the television. It's kind of a very, wide range of audience. May not be useful. Maybe a kind of waste. Then now we have different techniques based on trend analytics, data analytics. Use that. Using depends on your decision. So then you should be there to make decisions to do analytics, right? That's why this is a really important aspect. This is kind of a heart of the accounting. So then, if there's a numbers, but we need to do analytics, otherwise we can't use that, right? To make it useful, your role is really important. So then we have done with these 3 areas. Now area 3 done. Area 3, analysis, interpretation and communication of financial results done. Communication will be displayed at the group presentation. Communication will be displayed in the group presentation. How we are going to communicate it. So that we now discussed about the techniques, interpretation techniques, value of data analytics, and how we are using the qualitative aspect of this analytics. And all those things should be presented. Otherwise, no point. So the presentation is a crucial aspect to customize yourself. Presentation may be verbal presentation or kind of a report type of presentation, and it may be kind of a magazine. The way you are presenting is really important, right? So therefore, to presentation also we have different techniques. Now, to prepare presentations, and then we can get picture type of things, and we can summarize things over one slide. We have different techniques. The presentation is the slide. Present that is not the way, right? So then people don't have time to waste to see more presentation slides. You can summarize whatever the presentation to your kind of a very small presentation, maybe having 3-4 slides, not having the heavy words and all. We can put some pictures in the presentation. Maybe useful, right? That's the way you need to decide. The creativity should be there. The way you are communicating. So communication, all about communication, right? The knowledge and the skills should be there to present and communicate. So then that's the way you need to customize yourself. That's a kind of a tool you can use, communication. So then I expect your proper presentation once you are doing your group assignment presentation. So then most of the people, most of the yes, more than 80% will be my audit presentation. I have already given comment to you all each and every individual. So I expect the kind of positive results. So then it have been changed a lot. Right? Without presentation, you can at least make with the type of competitive interview or you can't take because it's all about presentation. That is not about this PowerPoint or something like that. The voice, gestures, positive attitude, the mood you are in, and different things may be added to your presentation. So then that's all about the message you are giving to the respective audience. What you want to communicate, are you correctly communicating to the audience? That's all about communication. So then you can communicate and the reality should be there. Whatever the people in the audience should be there with. Otherwise, no point. Then mama lecture karla yana. That is a fake lie. Follow. Gun and the fake. So they start a failure. Then I need to communicate. I need to summarize. So then the slide should be very, not interactive. Should be very, simple, right? Then it may help you to understand it. Then all those things may add a value to you all. So then it's really difficult to keep the attention, but I'm trying to do that. I hope that try to keep the communication so that you also do the same. So that if you want to be a lecturer or kind of a presenter, so the communication is a really good tool. And communication with real facts, with the numbers, that's also important. Some presenters are there, they are discussing different things without numbers. You have to be technical as well as you have to be a good presenter. Without having technical skill, if you are going to be a presenter, වාර්තිකක් තේරෙනවා කතා කරනකොට නේද? මෙයා ටැක්ස් එක දෙන්න කතා කරන්නේ. Politicians are ඉන්නෝ නේද? ටැක්ස් එක කතා කරන කට්ටියට නැතුව කට්ටිය. So then financial numbers, trends should be presented with. So then you can learn these two things, you can change your behavior. You can customize yourself in an audience. That's the way you need to focus. Right? Okay. So then we can move to the next lesson. What is that? I'm not going to explain the group assignment. I have already posted. You can go through that. You can ask questions. I hope that once you are doing in the field work, in the process of doing, you may ask questions. Otherwise, you may surprise at the presentation, right? For the last year's audit presentation, some of the groups surprised and had a difficult time in the presentation time. But I don't expect that, right? Don't repeat that. Okay, right. Right. So here we have three areas in our subject, right? Area 1, area 2, area 3. Area 3 almost done now, right? Area 1, EPS, LKS 41 done, right? I hope these two are very comfortable for you all, right? So today we have a individual assignment. I have included many questions from these two standards. I expect good knowledge from these two standards, EPS and LKS 41. And I'm today going to discuss LKS 20. That's about government grants, right? Government grants. So then here we have a list of standards to complete. Yes, some of the standards may take much time. Some of the things we can quickly finish it off, like interim financial statements, separate financial statement. These two, 27 and 34, very small standards. And 21, effects of changes in foreign currency exchange rates. The type of a lengthy standard. We have different, practical aspects to learn. And operating segment, also it will take time. And fair value measurement, right? And the lengthy standard is there. Siliparis 9, financial instruments. That's also important standard. It's a very common standard, right? Financial instrument. Whatever the area you are going, whatever the industry you are representing, financial instruments may be there. Right? It's a really important standard. If you want to be an expert in financial instrument, really good. It's asset. So then head accounting, financial instrument analytics, and that's the area you can invest. Identification, measurement, and doing kind of impairment testing, effectiveness evaluations. Those things are there. You can learn it. You can start learning from here. So then that will link with this standards 7, 32, 39 standards. Okay, so that's the basic scope we need to cover to area number 1. So then daily I'm covering some of the standards. So parallelly I'm planning to start area number 2, consolidation very recently. Consolidation, right? After finishing SLFRS 9, let's start consolidation. So then for consolidation, we need to spend more time. This is the high time we can learn consolidation. This is the last time you are learning consolidation, right? You have to do this. So then whatever the consolidation, if it is complex or non-complex or maybe you are having step acquisition, associate, joint venture, disposal, everything, and conversion in the foreign subsidiaries, all the things should be covered through your knowledge. I have a target. You should have a target in line with that. If there's a gap, there will be a fight. There may be kind of uncomfortable situations, right? So if there's a gap, but if you want to learn, if you have intent to learn this consolidation plus this set, definitely there's a room to learn. We'll do that, right? I expect that passion from you all to learn consolidation within this short period. Okay. Moving to the topic that's about accounting for government grants and related disclosures plus government assistance. Right? Government grant and government assistance. Government grant, government assistance. And how we are going to account that, how we are going to identify that, and what are the things we need to disclose. Those are the things we are going to learn now. So as the entity, there may be some economic benefit may come to the company without any can say that is a grant, right? The grant to a donation, right? Can you do a donation? If there's a donation, definitely that can be accounted easily, right? For donation, we don't have conditions, right? We don't have conditions. But for grant, there are conditions. There are a set of conditions to fulfill, right? There are conditions to fulfill. So then grant may be received from government entities, government agencies, or foreign company or foreign agency, right? So then that benefit should be accounted by the company. Should be accounted by the company. So the grant may be from cash, or some other kind of a benefit. It may be kind of a tangible thing, or it can be maybe intangible thing. Tangible things, you may receive a building with a land to your organization without any cost. It's a grant. It's a tangible grant. You may receive a 1 million cash bulk to your company without any cost. It's a grant. In other terms, you may receive kind of an interest-free loan. So then, if you are going for outside loan, you have to pay more than 12%, 13%, right? But you are getting interest-free loan. Interest-free loan is a grant you are getting, right? So those type of benefits may be there in the market, in the industries, in the countries, right? So then those benefits as organization, those benefits should be accounted. So then the way we are accounting may be different. How we are going to account it? So then those are the things you need to think. How we are going to determine these accounting policies? At which point we are going to recognize a grant? How we are going to separate government grant from government assistance? Right? And then further you need to understand what are the government-driven kind of sanitary facilities and type of common facilities they have given to the common public. Those are not government assistance. So then some of students are getting misunderstand about. So the roads and electricity and this drain system in the country are government assistance. No. So then wage company එක තියෙනවා. company එක ඉස්සරහින් මොකද? government එකේ ආණ්ඩුවක් දානවා. So then they are from provincial council, they are going to put a kind of a drain system around your premises. So then you are going to capitalize it in your books. You can't capitalize it. It's not a government assistance provision. It's not a government grant. So whatever the grant, whatever the assistance, you have to recognize that should be specified to you. Right? If they are giving commonly to each and everyone, it is not a grant or assistance. Right? So whatever the government related benefits, let's say they are going to introduce from government side, they are going to introduce kind of a system to deliver let's say postal system. Postal system, it's a service, right? It's a service we need to pay. So we are getting kind of a good benefit. So that benefit can't be capitalized. So through the government, we are getting some more benefits. Let's say, what else? They are giving kind of a, they're arranging type of a bank, type of a bank. Commonly, they are giving less interest rate loans. Not for the particular industry, not for particular company. They are giving low interest rate loans. So then that is not a grant because they have given that to kind of a common parties, commonly to the public. That is not a grant. So grant should be specified. So then if it is a grant, there should be a cash, the resource inflow to the organization. Resource inflow to the organization. Right? If it is an assistance, there's no resource inflow, like a technical expert knowledge or kind of advisory knowledge may be there. Assistance plus grant should have kind of a proper understanding. Government assistance and the government grant. So then here we have the definitions. Government assistance and the government grant. Government assistance is action by government designed to provide an economic benefit specific to an entity or range of entities qualifying under certain criteria. Each and every words are really important. So what are the important words? Action by government. By government. Government was defined previous topic. Government refers to government agencies, similar bodies, where local, national or international. Not only the local bodies, right? We need to focus the foreign entity or kind of a organization. Let's say WTO, IMF. All those are considered government. So then accordingly, government assistance is an action by government designed to provide an economic benefit specific to entity or range of entities qualifying under certain criteria. So then here, what's the difference with the government grant? Assistance by the government in the form of transfer of resources to an entity in turn for past or future compliance with certain conditions relating to operating activities of the entity. That's really important. So this is the key difference. Transfer of resources. Here, only economic benefit specific to the entity. There's no transfer of resources. It is creating some economic benefit. It may be technical advice, training program, or some kind of assistance. So assistance versus grant. So then both the things for specific group, right? Specific group. An entity or range of entities qualifying under certain criteria. Certain criteria are there. Here we have certain criteria, here we have certain conditions. We need to comply with that. So to recognize the grant, you have to comply with the given conditions. Sometimes in past period, you may have already complied with that. Because of that, you are getting this grant. Sometimes you may receive a grant. In future 5 years, you have to comply with that conditions. Right? So then condition should be satisfied to recognize the grant. Grant versus assistance. So then government grant should be accounted by using double entries. Government assistance, you don't want to count. Just a matter of disclosure. keep in mind, it's very important to me. So then government grant standard is what? LKS 20. Once you are learning that, we have two things, government assistance and government grant. But you understand the difference between government grant and government assistance. The key difference, government grant should be accounted, government assistance should be accounted. That's the disclosure. Government assistance, you need to disclose with that relevant criteria and the nature of the assistance. Right? Nature of the assistance. I hope you are again what we are discussing here. Grant related assets, grant related income. Grant related assets, grant related income. Sometimes grant may be received through asset. A government grants whose primary condition is an entity qualifying them should purchase, construct, or otherwise acquire long-term assets. Grant related to assets. So whatever the grants other than asset related to asset, we consider as grant related to income, right? So let's say you have a company, you have a hotel company, you have a hotel company. So then government requests you to develop a 100-room hotel. If you can develop a 100-room hotel, they will give you a land. They will give a land to you, maybe 99 is. So then this is relating to a asset to develop a asset in this. This is an asset related government grant. Asset related government grant. Right? Grant related to assets. And then government will say, so then same hotel company, they are giving a set of criteria. If you can accommodate, like let's say, if you can earn more than $2 million, $2 million, $2 million within another 2 years. Within another 2 years. And you should earn more than 40% margin. If you comply with these two criteria, we will give another 1 million LKR to the organization. To comply with two conditions, this is not related to asset. This is related to revenue and margin. These conditions. If we satisfy with these conditions, we will receive another 1 million LKR. This is relating to government grant relating to income. Grant related to income. So then we'll explain all those things with practical examples. So that's just the understanding you should have. I'll do some more examples. We'll go through some case studies. We should have understanding to identify asset related, income related grants, and whether we are going to recognize that as a grant or not. All those things you should be kind of expert, right? Forgivable loans. Forgivable loan. I already discussed. It may be interest-free loan or there are some payments some capital payments may not be except the required, right? And they can waive repayments of under certain prescribed conditions. There may be certain conditions. Some of the capital payments may be waived out, right? So then because of giving kind of a benefit to that particular industry. So then if we are eligible to this, forgivable loans can be considered as a benefit, right? So then through loans, we can give benefits. And fair value. Fair value. Fair value will be discussed under IFRS 13. So then fair value definition is very the meaningful definition, right? The price that would be received to sell an asset or paid to transfer liability in orderly transaction between market participants at the measurement date. That's called fair value. And previously, before SLFRS 13, fair value definition was different. That's very, we have some concern about that definition. So then it's called like the arm's length price between market participants. Likewise, we wanted to figure it out what's the arm's length price. We have some arguments about that, right? So then after a while, with SLFRS 13, we have very descriptive definition to fair value. So then that's all about what? Orderly transaction. Orderly transaction between market participants. Market participants, buyer and seller. What do we mean by orderly transaction? That transaction should be kind of a real transaction with the knowledge, with the relationship, with other, all the aspects. It should be a properly designed transaction. So then the buyer and seller should have kind of a willingness to the transaction, and they should have proper knowledge about the transaction. Other than buying and selling relationship, there shouldn't be any other relationship. If you have such a relationship between buyer and seller, that price won't reflect the fair value. While only one little primary rent. So the fair value is the the market rent price is here, one little price is bad. So then that won't reflect the real value. To reflect the real value, it should be a orderly transaction. Right. And then this is also very important. Market participant, the measurement date. The measurement date. So then fair value means that the measurement date the fair value, not the past date, not the future date. At the measurement date. But transaction is current rate doesn't matter. Right? So then you measure, you give the value, you will pay the cash in some other date, not the cash payment date value. So the measurement date value is a fair value, not the cash payment date, not the some other activity days, the valuation date. When you are going to do the valuation, the value as at that date should consider as the fair value in between two market participants for ordinary transaction. The price you are using we call as fair value. To determine this, we have three techniques. For these three techniques, we are using observable and unobservable inputs. Observable and unobservable inputs. No, we can observe that inputs and we cannot. Some of the inputs we can't observe. So the example, the market prices of the shares we can observe. Market prices of some other assets. Maybe vehicle pricing. You can get the market price. So then some other inputs for valuation, like fair valuation, biological asset valuation, using some other inputs. So then those inputs we can't get from the market. We can't search, we don't have any resources to compare them. So then if it is so, we can define that as unobservable input. So then we do pair evaluation by using different techniques. Based on this technique, we may use different inputs. Based on that inputs, we have to decide whether it's level 1 valuation, level 2 or level 3 valuation. So then all those things will be discussed under syllabus 13. Syllabus 13. Pair valuation techniques, pair valuation hierarchy, methods, principal market, and then most advantageous market, how you are going to decide that, how you are going to select it, what are the prices you need to select. Likewise, we have a detailed discussion about pair valuation. Right? So don't worry that. So while you are learning here, once you are identifying a grant, you have to use the fair value. Right? You have to use the fair value to account it. So that's why we have to use the fair valuation definition. So then if you are getting the cash price, we don't need to do that, the fair value. You can see the value, right? If you are getting some item, maybe tangible thing, maybe a land, maybe a kind of some other good. So then that item should be valued by using fair valuation technique, and then you need to recognize that as the grant. Right? To identify a grant, these two conditions should be satisfied. What are they? So then we need to comply with the conditions. We need to comply with the conditions, and then grant will be received. අපි condition satisfy වෙන්න ඕන. grant එක හම්බ වෙයිද දන්නේ නැත්නම්. Monitor the price, right? Without having, the probability of receiving, possibility of receiving, how we can recognize the grant? So then we need to satisfy the condition, and then grant will be received. Those two things should be confirmed to recognize a grant, right? So then, for final year, we try to know batch of pen, batch එකක් ගන්න. මොනවද? medal එකක් ගන්න නේද? අපි හිතමු grant එකක් කියමු. ඒකේ තියෙන conditions, right? So then we need to score this much, and we need to participate for this type of activities and extra activities. Then we need to have this much of GB, and likewise we have conditions. And then, if you want to capitalize it in your books, you need to satisfy that conditions. You have to order, make a how many you need to satisfy the conditions. And then the grant will be received. So then there should be a possibility. It was confirmed. So then that is there. So then definitely then you need to evaluate whether it will be received or not. After having both conditions, you can evaluate the situation and you have to recognize the grant. Right? That's about grant recognition. So once you are recognizing a grant, you can use capital approach or income approach. Capital approach or income approach. There we are giving assignments. So capital approach or income approach. Capital approach that can be decided. Government grant shall be recognized in profit or loss and systematic basis over a period in which the entity recognized expense the related cost for the grant are intended to compete. Right? So then we have two different approaches, capital approach or the income approach. So capital approach means we are not getting that to the income statement. We recognize that as the separate factors. We recognize the equilibrium. Right? Income report means grant is recognized in profit or loss over one or more period. One or more period. It may be a 1 year, it may be more than that. So then that period will be decided based on a systematic basis. A systematic basis. That period will be decided based on systematic basis. Why? So to get this grant, we need the by meeting we have been criteria. To achieve that criteria, we need to make a kind of commitment. To do that commitment, we need to have a customer. So then that must be carried in the so then first year we can't recognize the whole grant to the first year. Why? The commitment for last next 5 years. If there is a commitment for next 5 years, we need to split that grant for next 5 years. You can use kind of a straight line method or kind of a systematic method, which was decided by the management. Right. So then those are the basic things about grants, right? Further, I want to discuss the practical aspect, case study, and related questions about grants. So I have given 5 pillars. Yeah, 6 can be used. It can't be 7. It can't be, can't be 4. 5 or 6 members will be there in a group. Right? Is that idea? Group में हमने ये ना कभी नहीं देखा. Right? So then I have to discuss the interviews, example, and break it up. So then here one from now onwards, I will upload the assignment. Assignment number 2, annual consistent, government grants, FPS demand, ratios, and then 30 per share. Voltage consistent fund assignment. Then you have to do quickly. Within 1 hour, complete it and upload it. Right? In 1 hour, you have to complete it and upload it. So then, I will make it not 1 hour, 1.5 hours. Right? You need to complete quickly.